Hello and welcome to another update video about ADA. Unfortunately, probably one of the most boring charts we've got there at the moment. Really low volatility. I mean, just zoom out a little bit. Even just this move that started in June, okay? You can see it. It's just less and less and less volatility here on the chart. This was quite a rapid move. Then we moved down. Lower high, yeah, higher low, lower high, higher low. And it's just honestly forming this super boring sideways range here. And if you are new or you missed previous videos, to give you an understanding of the context, the idea is that ADA, the ADA chart, has been moving in a sideways range. I mean, it has. Okay, that's not, but it's we count it as an Elliott wave triangle. That's our interpretation, which means that it could go on for a little while sideways, but it eventually should move down and give us another bear market low. That would be the preferred interpretation. That can happen after a rally, a corrective rally into this region between 30 and 34 cents, which is basically the last wave of a triangle, and then down, or we go down more directly. These are the two scenarios. In both, I would currently watch for new bear market lows, or at least be prepared. And that's my perspective until we can see some more impulsive structures, a move that takes us above 34 cents, but even that wouldn't be enough. What would give us a first strong indication that a lasting low has been established, that's a move above 38.5 cents. Only if we see a move in 5 waves above that level, followed by a 3-wave pullback, we can really say that this bear market is likely over, or at least we have another chance to rally, okay? But at the moment, the price is just hovering just above support. And I count it as this A, B, C, D, E Elliott wave triangle with a lower high here to come somewhere, and then another low. Alternatively, this last E wave I just showed you could develop as a triangle itself. A, B, C, D, and one more lower high. Now, that would also be enough. It is still quite small compared to all these other waves that we had here in this triangle, right? So I'm skeptical about this triangle within a triangle theory, but it's possible. So to keep the triangle within a triangle theory valid, we need to stay below the 27 cent level, what I've labeled here as yellow wave C, because the small triangle can be counted as well as an A wave complete, B wave complete, C wave complete, D wave basically complete, maybe another low, yeah. As long as we stay above 23.6 cents, this D wave could be valid, and then another lower high. But then afterwards, if we then start to see the move down, you know, if we then see a move down is starting, then this could be the actual breakdown, okay, I'd be watching for. And bear market target, I mean, we talked about it before, round about 13 to 15 cents would be a region I'd be watching. But we can calculate that a little bit more precisely once we really have a breakout of the triangle to the downside. It is quite interesting that already in December, some of you will remember, we've been talking about a move down to 15 cents. It never happened. Well, it might happen now, just with a little bit of a delay. So that's just sometimes, unfortunately, what we deal with. Sometimes it just takes a little bit of time for these movements to play out. It has been a pretty boring bear market, a brutal one. Not necessarily in strength in terms of how far prices came down, in terms of, you know, what they did in previous bear markets, that's okay, but really just boring. Really difficult, and yeah, a lot of people losing interest, which you would expect in a price range like that. So maybe that interest will come back once we have made another decent low, that final capitulation ideally. But ideally, I mean, that should be it then. I mean, you know, it really can't go on for much longer unless these coins die, but this should really be the last wave down. The good news is it's a triangle is typically the last wave, okay? It's typically the last wave before a structure finishes. So actually it's a second to last wave in a structure. So while I count this as a wave 4, the wave 5 would complete this bear market. That's at least the current theory. but it is worth to be skeptical about a completion of the bear market until the trend is changed, okay? The trend needs to be changed on the daily time frame to the upside. Waiting for a shift to get clarity is very important. Okay, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.